Well, let's get the view on all of that, Brooke, with Jonathan Barrett from Commodity Broking Services. He's with us in our Sydney CBD studio. And Jonathan, good morning to you. Let's just start, first off, understand from what Phil said there. Was there that commitment to flow that maybe will show that his bark's as good as his bite?
Let's see what happens. But I did enjoy Phil's comment towards natural gas, which I really enjoyed, because that's something we've been looking at for a while. And I think it does actually flow. Obama's speech actually flows into the alternatives. And I think not only the US are falling behind, but Australia is certainly falling behind when you think that 85% of our power is sourced from coal. So it's an interesting space. Our speech didn't really move the market because oil remained pretty much in a tight range.
Yeah, and that's the thing, isn't it? Because if we've got to then see the split for what it is between NYMEX and Brent. It seems that Middle East events, what's going on in North Africa as well, is really driving Brent, but it is those perhaps supply thematics that are affecting NYMEX as they're capping those gains at least. You've got the Cushing read overnight to underscore that. Yeah,
very much so. I mean, you've seen that the spread's blown out to $19 previously. Now it's come back to around about $10.40. I actually still think there's more on the downside for that spread to come. But when you look at the data we've had out of the US, and it is interesting because it also does relate back to Obama's comments, that the US is well supplied in oil. Inventories last night are up 2.95 million, and their demand is at its lowest level since 2008. So when you combine all that together, it is just event risk that's keeping oil prices high, and I feel that is all that's keeping it at its levels.
Jonathan, it's Brooke. I guess we like to be optimistic about the outlook for natural gas, and it's good those comments are being made about natural gas. But again, it kind of comes back to, yes, these presidents can say this, and as Phil said, maybe they can look at natural gas, but there's never much action, and because politically it's just too hard to get away from oil.
Yeah, look, you're right. Brooke, you really are, because the governments have spent so much money on infrastructure, oil infrastructure, coal infrastructure. So it is a political event to try and move away, but it has to start somewhere. Because if you take just a very brief example in Australia, we've got 20% worth of targeted emission reductions. If the market gradually moved to natural gas, it's a cleaner alternative, and it burns at 30% less the emissions than our existing ones, coal and oil. So I think governments have to start this process in order for the governments to achieve the targets that they've actually got to get.
Yeah, are those targets, though, internationally set, though? Is this not the whole dispute, the way it's playing out, that we are setting ourselves up very much as judge and jury before there's been, an international panel established properly?
Yeah, look, I mean, it is there. I guess it's really up to us. It's the global body sets the targets. We've got to try and achieve it. I think we've generally fallen a little bit behind that. And obviously those concerns in Japan also an issue, because people are now going to focus I think their attention away from some of the nuclear programs and into some of the more renewable ones. So I think that we've got to start a little bit now, and we've got to start, and the governments, I think, have got to support a little bit more these renewable and alternatives.
Does this, though, really resonate in the corridors of power in Europe, frankly, Jonathan, where they've got enough on their plates right now, and they are key users of that existing nuclear power? France hasn't had a problem for decades since it got the whole thing underway, no less. So how do they join this debate constructively?
Well, I think, Carsten, look, it is interesting. I think they've already joined it. When you look at some of the Scandinavian countries, where their mix of energy is nuclear, it's coal, it's oil, it's wind, it's wave, it's all these sorts of other ones, and it's slowly getting that infrastructure and spend to get those other forms up to pace. Yes, a lot of the nuclear power stations there, a lot of governments are re-looking at them, revisiting that space, i.e. to upgrade them, to look at greater new technology. But I think the essence is, when there are alternatives, why do we need Fukushimas around the world if in fact it does happen? And I think society is resting on this issue as an important issue going forward.
Jonathan, can we ask you also about some of the overnight moves in commodities, particularly gold? Because while across the board we seem to be seeing evidence of heightened risk appetite, why in that environment is gold going higher?
Look, I think gold has been in a range, and remember when it reached that high of 14.47, it dropped about $20 pretty quickly. But what I think the market's looking at, they're looking towards this unemployment data coming out in the States. Last night we had the ADP data, which suggested a growth of 201,000 manufacturing jobs. So when I look at it, I think the market's reading in some inflationary pressures as a result of employment and Fed stimulus actually working its way through the market. So I think that's what we've got, and I think that will underpin the price for the time being. And they'll have to see really what the data, because the data expected out of the States is going to be, and is expected to be, quite bullish.
It almost seems the market, not too bullish. I mean, expectations can go where they will,
Yeah.
but I mean, there's traders saying that we might see 250,000 jobs added in the non-farm payrolls, and the consensus is only 190. So those whisper numbers are even better than that employment read, which would, I guess, be quite good anyway.
Look, it'll be very good, but it'll also reinforce the terrific run we've had in equities. And your previous guest was saying, oh look, you know, maybe this is maybe we're going to have a correction, when we always say, when in May, stay away from the markets. Maybe we could see the fact that these stimulus packages are really priming this economy, and as a result of that, equity prices are where they are. So maybe it is buy the rumour, sell the fact tomorrow night. I hope not. Because I'd certainly like to see the Fed's policies really work through the economy and start to show some really solid results, and that solid results is a reduction in the unemployment number.
Yeah, well, on that measure alone, I guess you take the annualised figure, you don't get too swerved off course by month on month, because if anything, you know, February was revised downwards.
Correct, very much so. No, 100% agree.
All right, let's move beyond that one, of course, because the proof is going to be in the pudding on Friday. Let's talk some of the softs as well, and let's in particular focus in on grain. Some of the price action there overnight. What do you think the drivers were for its move?
Yeah, Carson, look, it is. We're waiting for the USDA reports. This is the quarterly report that suggests where we are with stocks, where we are with plantings. And I think the market is certainly sort of saying, well, look, this will give us a bit of a view as to where we're going to see grain prices. At the moment, we feel that corn is a little bit too expensive, but we're certainly looking at the price action and where soybeans and wheat are at the moment, particularly for wheat, as we head into the spring planting session over in Europe. So I'm certainly keen to see what happens on that, particularly when we've had droughts in Russia and subsoil moisture is quite low. They're expecting a really big number in terms of plantings over in Russia, but you know, the subsoil moisture to me is a real telling point as to whether or not the crop is sustainable and whether or not we'll have other effects in terms of prices. But our view is that wheat and soybeans from here must start to trade higher.
Yeah, John, all of the positioning seem to be around that report which comes out tomorrow. I mean, these quarterly reports are always hotly anticipated, but I just get the feeling this one is even more so. People see it as even more important than usual. Why?
It is because the last 12 months we've had so many weather-related concerns across the world. So the US is as a major provider. So the market is going to look to the US to see how world-ending stocks potentially will be. Remember, we've already seen about a 13.5% drop in stocks in wheat, and to me that's a concern, given that this season's about to start in the Northern Hemisphere, and if we haven't got the right growing conditions, it could certainly keep prices relatively well buoyed.
If it's so big, is there any potential for this to spill over into equity markets? Because we know that the food inflation issues on the table, and when we're looking at margins for companies and whether they're going to be crimped by all of this.
Yes, it is. I mean, but we've got to see the numbers. At the moment, grain prices have come off and they've corrected from their highs. All we really need to see is a sustained movement in prices. Then you'll start to see the euro starting to move on interest rates. Trichet's already mentioned he would. The states might do, because they've got to control that inflation. So that's a dampener that could affect if, in fact, we see prices start to move up from these current levels. And yes, it could flow into equity prices by means of higher interest rates.
Can I just also get the view from you as well on cotton, because this is the direct pass-through to the consumer in the form of higher clothing prices, inevitably the pass-through there. So this USDA report on intentions for planting, if we've seen drought-like conditions in the northwest of the United States, Midwest, what does that do to other countries picking up the slack? Are you hearing there will be a pickup in production, say from the likes of the Indians?
Yeah, very much so. I mean, it's sort of, you tend to see a reduction production in the US, Northwest, but in Australia, you know, we've had the floods. Remember, Australia is a prominent exporter of cotton, and we're seeing a definite uptick in cotton plantings this year in Australia, and that'll certainly help to placate the market. The interesting thing about the price for cotton, it's at these levels and it's stayed at these levels, which suggests that supply-demand ratio, we still don't have enough supply. So those countries that can ensure that they have that water flow, like Australia, will be going full steam ahead in terms of, you know, obviously we're going through harvest, but for the next crop in Australia, you'll see planting intention significantly higher.
Jonathan, I know you'll be across that report. Look forward to talking to you next time. Many thanks.
Okay, thank you.
Appreciate it.